All right, now hear me out. If you just flip-flop the last two Sunday reports, I look like a genius. So just in your head, just reorganize that, and then boom, perfect. We got every report right to date. Anyways, welcome back to the Monday Report. Let's break down what's going on. Did some extra research today, and I think you're going to love this episode. So last week, I put out the Sunday Report. I talked about potential crashes in the market and in crypto that could be coming up around the corner. This is because I thought the market was really ambiguous, and I just wanted to talk about the overall macro view and just do some reaffirmations with it. Then come Monday, I quickly pivoted. And as you can see here, I was tweeting all over Twitter. Said in the Sunday Report, you can see blood, but even with the after hours bleed. Now, this was the reaction to Snapchat where you saw the stock taking off. I said, my gut said there's potential for one more bounce. And that was because of everything that I was seeing on this market. Like we had a triple bottom on coin where with tons of bullish inflow. Even with, first of all, and why did Snapchat kill this market? I don't think anyone could actually answer that question other than it was just like an unexpected revision to the downside for their forward-looking guidance. And a lot of it had to do with ad dollars. So you saw Google, Facebook, Apple, Roku also have big sell-offs. And that's just because those are all ad revenue-based companies. But then I was trying to post all this data, trying to give them perspectives. All of this was in the Discord. We were talking about it a bunch. I'm saying it looks bullish. It looks bullish. Powell came out. It's a big nothing burger. Some people did big reports over what Powell. It was nothing. It was nothing. It was what the Fed's been saying for ages. There was nothing new there. No pauses. Market still took it as a sign to go bullish. And I mean, if you don't follow me on Twitter, follow me on Twitter because I was pretty dead on all throughout Twitter. And yes, this is just a cop out for getting some stuff wrong on the report. But remember, this is the Darwin philosophy for my trading. Okay, it's not the strongest or the weakest or the most right or the smartest that survive. Obviously, the weakest don't survive. I don't know why I said that, but it's the most nimble. Okay, I had a very bearish outlook, but on Monday and even on the bleed on Tuesday, I was still saying I see a bullish undertones in this market, and that way we didn't get blown out. I pulled back a lot of the Apple puts I had, a lot of the bearish positions I had. I started buying calls, started playing IWM because IWM looks like it's got more of an absolute bottom to it than the other indexes because I still see lots of bearishness on the way. And in fact, the more this market rises, the more worried I am about that. So let's go ahead and do some technical analysis for what I think could be occurring and playing out right now. First, let's talk about Bitcoin. This chart just looks awful on the year graph, but let's go ahead and go to the month. It was right around here that I was saying, okay, I would expect some more bullish flows to come in. A lot of people have been talking about this 30K level like it's a big deal, but as you can see right here, we're just in this tight range right here. You know, I'd say we're in between this 31 and this 28 level is basically what I would say. This is a trying to break out to the downside. A lot of this was because of the Luna Terra UST network collapsing right here. So this looks like a new sell-off that I wouldn't put at a tight technical range. Although if there's another crash, I would look for a break here at the 26, which would probably take us down to the 20K level, and there we'd be at risk of 16. Which I still have clocked as like the all-time low possibility. But for me to be really bullish about this, I want to see us break this like 31,800 level right here, and past that, I would see confirmation at this level I have set pinned right here. And I've set actually a notification. That's why you see that line there to let me know about a short-term bullish bounce. Right above this level, I start selling because I think there's more lows on the way. But that's what I see for Bitcoin. It looks like this might try and play out. I was saying that I was seeing some bullish. I thought maybe there'd be some bullish base case around this point right here. We'll see if that plays out. But honestly, I'm a little skittish of it as a whole. But I would like to unload some of mine if we do see a continued short-term rally from here, though. And I think that's worth mentioning is that any of these rallies, I'm looking to sell into them. So now let's take a moment to look at the indexes. First thing I notice when I'm looking at these charts is technology is definitely underperforming even in this rally. Look at where QQQ's at. And look where SPY's at. We're seeing a lot of banking stocks start to do well. Some whole building stocks are kind of having to bounce as well. A big one I like to follow for that is Nail. And when we're also comparing these two in the performance, you could see QQQ and technology typically likes to outperform the SPY. And we're seeing that start to shift. The SPY starting to lead the way. QQQ is kind of stalling a bit. But then if we kind of span out here also and then look at IWM and SPY, we're starting to see that IWM's pretty much hit its COVID highs. I think there was a high here at like 173. We hit a low of 176. So when I saw the bullish movement, I went to the small caps. I saw the least amount of risk in the small caps, which seems like they've hit a low that's kind of pretty solidified, and that I think we can see the biggest bounce here to new highs, even though the Fed is still wanting to bring this market down, even though we're expecting to see a slowdown. When I'm just looking at the technicals on these stocks, I see the most upside in IWM when compared to the SPY and QQQ. So now let's talk about SPY. So what I was saying in the Discord is I think we're probably going to get a bounce to 420, which, as you can see, pretty much looks like it's already playing out. I would expect once we hit this range to see a bit of chop and then a potential push to 440. I'd say there's probably about a 30% chance of us hitting 440 after we hit that 420. I'm thinking 420 is pretty much set in the books to occur. And then I'll be looking at 440 as the potential top to come in this market. After we hit that 440 level, though, what I'm going to be looking for is a revisit to the 350 range. So I would expect us to come back here to about 350 with probably about a 70% chance of us coming down to 350, and then probably a 30% chance of us all coming all the way down to like the 320s right here. Dip just below our COVID highs in that 320 range, where we see some solid support right here. Probably right about there is where we're seeing that. Some of that support come in. And because I'm seeing this as like a blow off top that came through. And so 320 is where I'd set that. 30% chance to go all the way to 320, 70% chance to go to 350, 30% chance that this market in the short term can push to 440 before we see a revisit to the lows. Because remember, the Fed is still after this market. The Fed is your enemy. The Fed wants your head, okay? They want to destroy demand. They want to bring down inflation. It is the number one concern that they have. But we'll talk about in a moment when we go over the economic data, some things that could change that. But if you're wondering how those levels are set, those are set with Elliott waves and Fibonacci retracements. So we can do some more analysis on that. And luckily this week, we'll also have Joe Anderson, who's the VP and portfolio manager for First Capital, who will be posting some information in the Discord. If you've been in the Discord, you saw that we set up a channel for him, and he is a wizard with the technical analysis. He has a big science background and then went into finance, and we've been networking and colluding on creating this data as well and coming up with these levels for your I just like totally smacked my mic around, for your benefit. Flawless. All right, now before we talk about some news that's been hitting these markets, let's go ahead and talk about the economic data. Okay, so today Fed Waller came out. He's one of the more hawkish members. He was still very hawkish. He still thinks that we can avoid a Volcker moment, which was like a sudden raise in interest rates. And remember, interest rates are a big deal, but still not as big as the deal as the rolling off of the balance sheet. But he was still like, let's do all this. Let's get some 50 basis point hikes into this market, and then we can avoid that situation. Inflation is still the number one thing. Now, on Tuesday, it's not listed on here, but on Tuesday, Biden will be talking to Powell. Now, the historical precedent here is that in the past, when Trump sat down with Powell at moments like this, he said, you need a 180 or you're fired, basically. And in the past, the Fed is supposed to be disconnected from politics. To anyone who's got a close eye on this, that's not the case whatsoever. Very obviously not the case whatsoever. And so we could see some political pull. However, I think that political pull will be to tackle inflation. I do not personally have any expectation of the Fed reversing policy when it comes to tackling of inflation. They want it to come down. They need it to come down. Politicians want the same effect because they're worried about having jobs in the next election cycle. Okay. And so there's maybe some argument. There's probably some sort of baseline argument for a turnaround because of the slowing of the U.S. economy. However, when it comes to votes, when it comes to the things that the majority of people are paying attention to, it is the gas prices. It is the prices of everything around them rising and then inflation in front of them. And they are not looking past their nose, okay? That's why lots of people are cheering for the law that got passed in the House, which will likely get denied in the Senate, to put a cap on the gas prices, something that we talked about in the last Sunday report. This is very obviously a stupid thing to do. It's terrible. It'll cause another crisis. But people don't look past their nose, and they're saying that this is a good thing, okay? This is the same thing that occurred with the defunding of the police, which is a very nuanced topic. But overall, there needs to be reallocation, probably more training for the police. But to defund them in an environment when you have a huge wealth gap, and the economy is in a downturn, inflation's really high, we're now suffering a lot of social turmoil. And crime rates are starting to rise again, especially violent crimes. This is not just an ironic thing that's occurring. This is historically what always occurs. And heading into this turmoil, they also defunded the police, and there's huge cultural pushes against the police. This has nothing to do with the market, but this does kind of paint a picture of what's going on socially around us. Now, it will directly affect the market, but it will help with the development of narratives and what is going on in the world around us. And it shows how disconnected people really are and how they just can't see past their noses. They don't have the foresight. And I'm not saying people are stupid. It's just they're busy with their job, their kids, their hobbies, and they don't like to think about things like this. This is why most people don't get into investing, or they're scared of investing because there's so many things you have to keep an eye on and be aware of. And especially when it comes to politics, there's not a lot of people who participate in high-rung politics. Most people participating in low-rung politics. So, by the way, if you watched the video that I shared on Twitter, on YouTube, which was featured on the All In podcast, I think that was a great video talking about politics, how most people participate in low-rung politics where they draw broad assumptions about everyone on each political side, whereas people who participate in high-rung politics think that everyone's on the same team and just has different perspectives and we have to come up with compromise. That's high-rung politics. That's people who actually understand politics, and some politicians don't even participate in that level of politics. And I think most of the general population just participates in low-rung, not thoughtful, no nuance, and no actual of wanting to understand in depth the issues that we face today and understand the nuances of how to correct them and develop situations. Those things do not occur in low-rung politics, but high-rung politics is where we can work towards building a better future. So, anyways, I'm sorry about that derailing. I just thought it was important to say because, I was making comments about that in September. And that YouTube video even helped me find some better words for my thoughts on that topic in general. And politics plays a huge role in what the Fed does, as we've already iterated, and in how the trajectory of the economy could play out. And so, all those mistakes are now turning into a huge red wave. Biden's going to meet with Powell. He wants people to be on his side so that him and the Democrats will have jobs on the next election cycle. Seemingly, a lot of them are already giving up and saying they're not going to run again. But we'll see how that really plays out. And they're going to do whatever will help them get reelected. It does not matter if it's good for you or bad for you in the future, if it is the appropriate decision to make. Whatever will seem like a good idea in the short term, whatever will get them the most votes in the short term and keep them having a job is what they will do. Will be no foresight, no looking past the nose, no nuance whatsoever in their decision making, because that is the structure that we have set up. That is the system we have set up. You only want to make what's the best decision for the next 4 years so that you can keep your job. That's all they care about, is maintaining their power. That's all they're incentivized to care about, really. So I do not, for all those reasons, I did not expect them to change policy. Now, the other things that are going on. JOLTS job openings will be interesting to see. As we've said in the past, this is a very unique recession because we have more job openings than there even are people who can pick up those jobs, which makes the Fed more confident in demand destruction and job market and less concerned about job destruction due to the fact that there's so many open jobs. And I should probably stop shaking the ice. And so many fewer people who are looking for jobs. So we want to see that maintained for the Fed to stay on track. PMIs, these will be interesting numbers to see. We've been beating the consensus and forecasts on those. We want to see these come down. We want to see these inflations come down. It'll be really important over the next few months, probably up until August, to see that actually come down. But remember, the Fed said that even when these start to level out, they will not stop hiking. They will simply move to 25 base point hikes instead of the 50. So there is no change in plans from the Fed, even when inflation starts to come down. That is really important to keep in mind. We'll have some more speeches, which have, consistently been giving short-term downsides in the market. We did see that start to break last week. So just important to keep aware of, even though there's been some breaks in that. The consumer confidence, I skipped that, on Tuesday will also be really important. And of course, we want to see what happens with the Fed and Biden talk that's occurring. Excuse me. Jobless claims will be interesting. But like I said, with those job opening numbers, it'll only be interesting to a certain extent. And let's see what else we have here. Unemployment rates, probably going to continue to be persistently low. Payrolls, we want to see those continue to hike up. And I think they will keep up with inflation. That would be great for everyone. And that looks about like it for this week. We got some speeches. But nothing too big, nothing that I would expect the market to turn around. Of course, we'll be looking for that, because what we're looking for is what will cause this to not push to the 440 and start that confirmed downtrend. And a break below 420 probably wouldn't be confirmation for me, but a break down to that 415 range, basically where we're at right now, would be confirmation that we are then going to new lows. I do not think that 380 was the low. I think there is 5% chance that was the low, if that. You just have to remember, the Fed is against you. The Fed is against you. And if the Fed does reverse, let's actually play this out real quick. If the Fed reverses on their policy, think about how little, how do I want to say this? Gunpowder they have to launch this market back up. Okay? They've already done so much quantitative easing. They've already lowered interest rates by so much. What are you going to do? You're going to go from 1% back to basically negative again? I mean, you've barely pushed them up. Previously, before COVID, they actually did get a good amount of stimulus. You can't print more money, though, because of how high inflation is. You could bring interest rates down more, but then you risk the crisis being even worse. Confidence for the Fed Reserve is already near all-time lows. If they did turn around and proceed to inflate this market and create a real bubble and cause more stress, it would be outrage from many, many, many economists. It would be so irrational that it would be dumbfounding. Yes, the market would take off, but it would simply mean that you are delaying a catastrophic crash at that point. A crash would be basically already a foregone expectation to occur if the Fed did turn around. It would not be long-term bullish. It would be very bearish, and then we would be risking hyperinflation, especially if they try to inject more stimulus out. It would be terrible to see that. So, lots of people who are wanting the Fed to turn around. Again, this is as far as they see. That's it. They can't see past the nose. So now let's talk about some other news. U.S. growth seen outpacing China's for the first time since 1976. Wow, that's crazy. Lots of people are saying this is because of the COVID stuff. We've talked about this in the past as well. China is hurting right now. The housing market's crashing. Their growth is slowing down. They shut down 40% of their economy, and now they're not going to be outpacing the U.S. Now, the part of this conversation that I feel like people aren't paying attention to was last year, all the repealing of the capitalistic features of the Chinese economy that were repealed off of it. You're pulling back those growth factors that led to all that strength in the Chinese markets. Okay. And people are just saying, oh, when the COVID stuff goes away, this will come back. I was expecting this to be a short-term bounce. Now that we're seeing some of more of these bearish headlines, and we're seeing that China is struggling. And like we said before, when China's put all that stimulus, I saw it as really bearish. They were telling people to go ahead and buy stocks, saying that they would support their markets. Again, really bearish for me, because it tells me that they see something really bad over the horizon, and they're trying to preemptively resolve it. And so now we're in this situation where everyone's just relating everything to COVID, ignoring all the real growth factors, long-term growth factors that led to all the Chinese strength when entering the global markets, allowing more competition in the markets, more free markets. We saw them say no more profits in education. We saw them jailing CEOs. We saw them trying to slow Alibaba's growth. We saw them attacking the gaming companies. We saw them attacking their own social media companies, attacking some of their own technology companies. You can't look at all that and look at what's going on COVID, look at what's going on with the housing market and say this looks bullish in the long term. It's just, you have to be delusional. And we didn't even need to dig into data. We can just look at that conceptually and say, okay, have communistic practices or a country who is actively destroying their own market, does that lead to success? No. All right. Simple as that. We don't even have to talk about the genocide or the human rights issues or the overall suppression of the people putting their fridges on their porches because they can't eat, even though China has way more reserves in food that they aren't helping to use to feed their own people. Okay. It's just wild to see. And that's not the only news that's worrisome. Let's hop over here to some of the information that Marlo shared. If you don't know who Marlo is, that's our Discord CFA. How many Discords got a nice CFA on hand? Not many. All right, so just in 30 Chinese warplanes into Taiwan's Southwest Air Defense Identification Zone today, and that's from the Ministry of National Defense. This is huge. This is one of the base cases we had for an invasion to occur. Look, when Russia invaded, there were lots of reasons, NATO, blah, blah, blah. But one of the things you can't ignore is how they were having a population collapse along with some economic turmoil. And, picking up a nation of 40 million people who's also, a huge wheat provider and also a uranium provider and an oil producer, adding them to your economy, all those people as well. Good help, good help your economy, expanding a little bit can help. That's the same thing China could be considering right now. Like, hey, we're collapsing. Our population's collapsing. This communism, that can't be the issue because we love that. We're just going to ignore that one. Same thing the USSR did is like, communism can't be the issue. The fact that we have a bunch of politicians making decisions about, nuclear reactors, that can't be the problem. These engineers are out of their minds. Just ignore them. Keep doing what we're doing, for the party. Yay. This is the stupid things, It seems ridiculous in hindsight because it is ridiculous. But when everything's going on, people seem to want to have a debate about it. But it's so idiotic to me that it just feels silly. So I'm just gonna keep it straight, So in response to this, aggression from China, we're seeing some now articles coming out that U.S. approves $100 million deal for Taiwan to upgrade Patriot missile systems. We also saw a report from Biden who said that the U.S. will defend Taiwan. Okay, this would not be like Ukraine. Some people were saying that when the Ukraine and Russia war happened, that's the bottom, because when there's wars, those will always end up being the bottom of the announcement of the war. We were at war. We were not at war. That occurs when the U.S. is at war. We were not at war. Okay, that's huge. It's a huge factor. We are supplying unlabeled weapons to Ukraine, which is legal under global rules of engagement. So we're just doing that. There's something we've done tons of times before. We did it in Cuba, and whatever. We don't need to go all of the base cases for that or historical references. So we're now going to be in a much different engagement if China moves forward on this, okay? And those technical levels that I talked about this market crushing itself down to 320, let me tell you what, that black swan event right there is exactly what would cause that to happen, and it would be fast, all right? If China invades Taiwan, semiconductors, technology is going to be the last place you want to be, and could even be part of the reason why we're seeing those stocks not keep up with the value stocks. And so, huge black swan event, stuff like this, extremely concerning. And the base case for why they would want to engage in something like this, I feel like it's really strong right now. It's really worrisome. China's also decoupling from the global financial system, just like Russia did. This all leads to more turmoil and increases the likelihood of these events occurring. And China building up its wheat reserves, building up its food storage reserves. Hello, there is some signs here that are really concerning. They cannot be ignored. And so on that warning, that will be the end for today's Monday report. I hope you found everything helpful. There's a lot to watch, and we'll be trying to keep you updated on everything going on in the world and in the markets. Make sure you join the Discord where the conversation's always continuing. And like we talked about at the beginning of the episode, maybe give me a follow on Twitter as well, so that you can also get real-time updates, so that if I said something in here and then on Tuesday I see something completely different in the market, you'll be the first to know about it, and you don't got to wait for a video to do some catch up. I hope you found that helpful, and I will talk to you on the next episode. Oh, and one more thing. Join the Discord already. What are you doing? Also, we finalized all that information with Stream Elements. So we'll probably be doing more streams as well with, fancy little border and all that jazz. We're also resetting up the clothing shop. A few of you have messaged me about that, and that will be back up this week as well. Yay, celebration. Also, this week I'll also be going on vacation. So next week's or rather this week's Sunday reports might be a little wonky. It might be a little shorter. It might be a written report. I'm still figuring out how I maybe want to do that. Maybe I'm bringing all my equipment with me. Maybe I'm not. We're taking a nice little lake vacation to go visit my girlfriend's family. So I'll figure that out at that point. Maybe I'll put some stuff out on Twitter and just do a little shorts, maybe from like a canoe or something fun like that. Anyways, talk to you then. Love you all. See you in the Discord. I just crushed that cup. Whoops.